Let's welcome in the management at Aarti Industries now. Mr. Rajendra is now joining us. So when you just look at the numbers, the last 2 year CAGR for your revenue has been 9% and for your expenses has been about 20%. When do you expect that to translate into the revenues?
Yeah, next year, we expect around 30% revenue growth. Last year was impacted mainly because of COVID.
Right. If you look at the margin number, the margin seems to be missed versus the estimate. How would you say that? Do you think margins would tend to go up? Because across chemical and pharma companies, we have seen that margins have actually gone down, especially for the chemical ones.
No, as sales goes up, the expenses will not go as much. So margin improvement will take place going forward.
Okay. All right, sir. Well, we've been talking a lot about Aarti and the kind of rally that it has seen. If you could talk to us about what have you witnessed in Q4 in terms of, the sales, because there's been a great surge over there. So what's really contributed to that? What's been the volume growth like?
Yeah, Q4 was partly impacted because we had annual shutdown of our acid division, and also in our Jagadia plant we had taken maintenance related shutdown. But YOY still we had about 9% growth in top line in Q4.
So I understand you also have, Okay, so you have capacity expansion as well planned. So, when will that sort of kick in? When will those new capacities be commissioned? How will that drive your top line?
Yeah, I already mentioned this. FY22 will have about 30% top line growth, and then further in towards FY24, we are targeting almost nearly doubling the top line from FY21 in 3 years.
At a better sales, sales growth number coming in, why has the company approved fundraising? Why does it need funds?
Yeah, actually, yesterday we had also given a broad growth strategy. So we have about 4,500 to 5,000 crore capex lined up for next 3 years, FY22, FY24. And that mainly will be led by newer product and newer value chains, and which is then going to give boost to the growth from FY25 onwards. So because of this substantial capex in 3 years, we are evaluating regarding the fundraising.
Right. So, we've seen a constant shift as far as China 1 is concerned, especially in the chemical sector. What is your perspective? Do you expect this shift to continue? Is that a big opportunity for chemical sector in India in terms of exports still?
Yeah, that has been happening for the last few years, and it is continuously further strengthening with COVID as well as US-China trade issues. So appetite from India in chemical sector is going further up.
See your revenue breakup change. Currently, you have more than 78% coming from APIs. So how would it essentially, will it continue to be this sort of a breakup where you have 78% from APIs, 12% from formulations? If you could give us a sense of the product mix.
Yeah, basically, specialty chemical and around 75 to 80%, and pharma 20 to 25%. That will be the revenue mix.
All right. And if you could talk to us about the domestic export sales mix as well, because, in FY21, we saw exports growing at a faster pace than domestic. Is there any, margin difference between the two sales that you see?
That is generally in a product to product. Certain product export may have more margin, and certain product local might have more margins. It becomes very product specific. But broadly, the margins are of a very similar trend. And going forward, the exports will increase because with our commissioning of our second and third contract, which are 100% export oriented. So we'll have a substantial jump in export in FY23.
Right, sir. Thank you so much, sir, for taking out time for us. Just wanted to highlight BPCL and Shipping Corporation stocks of India have actually moved down. This is probably post the story that Ruchi just told us at the top of the show. So just wanted to highlight that. On that note, we're taking a break. Coming back quickly. Markets absolutely flat. Stay tuned. Lots more lined up on the other side.